Hello and what is going on, lovely people of the internet? It is HOOTMONEY here with another video for you guys today. Today we're going to be giving you guys 5 stocks to buy right now, and these stocks are awesome. And guys, our other plays on my previous videos, they're all doing amazing. Fubo TV, Tattooed Chef, Palantir, etc. They're all doing absolutely phenomenal, and I'd like to thank you guys for helping me out in picking these stocks, because this has been a very fun process of choosing all these stocks. Now, without further ado, I'm going to be giving you guys a surprise lesson on taxes at the end of the video. So if you guys have lost a lot of money since the February growth stock crash, there's a bunch of SPACs that are down really badly, and a lot of other stocks that were just high growth, high multiple stocks have been absolutely crushed. So this lesson will let you guys have a tax advantage on those stocks if you guys did end up losing money, while also giving you more exposure to that stock. So if you have 100 shares, it'll give you 150 shares of exposure to the stock while also taking advantage of the tax loss. So that is very interesting. So if you guys want to see that, make sure you stick around for the end of the video. So without further ado, let's get right into the video. Alright, so the first stock that we have on the list today is Apex Technologies, or APXT, which is a SPAC that is merging with AvePoint. It's a data analytics company. It's kind of similar to Palantir. They have contracts with Microsoft, and they are expanding at over a 20%. I think it's around 30% compound annual growth rate. So this SPAC is good, and it is very close to net asset value. If we go out to this 3-month chart, you see it, or actually we'll go out to this yearly chart, you'll see it was basically hovering around $14-15 a share. It was one of the more talked about SPACs, and it kind of fell off a cliff, as you can see, and it's finally rebounding now. So if you guys want to catch on to this breakout, now is a relatively decent time to be buying this stock. Now, I was an owner of 100 shares of this stock with around a $14-15 cost basis. Alright, so I took advantage of this tax strategy, which I will be explaining at the end of the video, because I know you guys want to see these stocks now. However, I will show you guys how to take advantage of the tax loss. So I now have a $400 to $500 write-off on my capital gains. So if I want to sell anything short term this year, I can now write off $500 worth of those gains. I personally see APXT getting back to around $15 to $20 a share once the merger is announced. The merger has been taking pretty long for APXT, so once that merger is announced, I do see this stock running. The next stock we have on this list is Fubo TV. We were talking about this stock when it was in the $15 to $20 range. I told you guys to be greedy. This one's down bad, and it has a lot of potential, and look at it now. We're up around 11% on the day, and we're at $27 a share. I definitely see Fubo as a $40 to $45 stock. I can't tell you when it'll be, can't tell you if the volatility will end, but in the long term, I definitely see Fubo TV as a double your money. Even at $27 a share, it might take a few years to get there. However, I definitely see Fubo as a double your money play. It has great fundamentals. It's expanding very fast. They're going to be doing work with all these different sports organizations and getting into sports gambling, so you really can't go wrong with Fubo. The next stock on this list is DraftKings. So DraftKings is another one of our sports gambling plays. It's a direct competitor with Fubo. However, it does have more gambling infrastructure than Fubo, and you can currently use it to gamble. So it is a safer play on the sports gambling than Fubo, but it doesn't have the live streaming aspect as well. It is just a pure sports gambling play, which is also a hugely expanding market, which is why we do like DraftKings. We'll come out here to the 3-month chart. We're down 26% from its highs. So this is a sign that it's time to be greedy. It has a high of around $72 a share, and we're sitting at $50 a share now. We missed the mark to get it for $43 a share. However, I did make a video on it a few weeks ago, so I'm making it again because I do think it can continue to run. If you guys are over 18 and you do watch sports, you definitely have friends that use DraftKings, so that itself explains the popularity of this company. And as you know, in sports gambling, the house always wins, so DraftKings is the house. I would make my bet on DraftKings. If you guys wanted to check out any of the stocks that I talked about in this video, make sure you check out the link in the description below or in the pinned comment section to sign up for Public. You get up to $50 in free stock for signing up. I've seen someone get up to $41 myself just by signing up. No deposit required. You have to put $0 down to get this free stock. So you can literally get $50 for free for signing up. So I don't see why you wouldn't do that. And public.com is an amazing investing application. It is very easy to use, similar to Robinhood, similar to what we've been doing today. However, it is on an application that will never sell your trading data, never do payment for order flow. They only make money off of tips from their customers. So that's how you know they are going to be delivering amazing customer service, just like a waiter or waitress would at a restaurant for you. That's how I would describe Public. They are truly working for the customer. They're working for you as a consumer. So with that being said, check out the link below to sign up. Now the next stock we have on the list is Rocket Companies. Now guys, Rocket Companies, when I picked this stock this morning, it was still at $17 a share, guys. $17.74. Now it's bumped up all the way to $19.30 in a single trading day, within a single trading day. So it is very, very volatile for what it is. This company isn't entirely a growth company. It has some growth aspects to it. However, Rocket Companies, Quicken Loans, and Rocket Mortgage just really have a huge business model already, and they don't really need to make that many changes to their business model. So for that reason, I think this one is pretty safe. However, it is kind of a meme stock. With that being said, so there's always the potential for this one to run. As you can see, up almost 8% on the day, so that is not really a stable stock. You can see that it has a lot of volatility involved. However, we scroll out here again, we go up here, it squeezed all the way to $41 a share, which is when I sold out, and I'm looking to re-enter my position. It was hovering around $16 range, the $16 to $17 range. If you guys can get it in that range, I think that is a great buy. $19 to $20, it may not go too much higher than that short term, because as you can see, that was pretty much its price wall. You can see right here, 22. Okay, so $22 a share is where it'll probably find some resistance, and we're at $19 a share now, so there's still some upside. However, I think $17.50 would be the perfect price to scoop up and build out your position on this stock. The next one that we have on this list is Teladoc Health. Now, I have not talked about this one yet on this channel. However, Teladoc is definitely going to be the future of medical attention. People need doctors, people need convenience. Add them two together and you get Teladoc Health. I've used their app before, super easy to use. You load in your insurance and you can sign up for a doctor's appointment where they will tell you if you are okay. You can upload pictures so the doctor can see what exactly you are experiencing. They can give you prescriptions. It basically saves the time, effort, and money that is involved in going to a primary care doctor or any type of specialist doctor. Teladoc Health is the future of medicine, and I am usually a fan, as long as the fundamentals are there, for any type of technology stock that is basically taking an old industry and making it more efficient. You can say this with Uber, what they did with taxis, Facebook, how they changed MySpace, and they just changed the social media game. Any company that is using technology to take a current industry to the next level, Peloton with exercise, I think those are amazing stocks that will perform well in the long term. You just have to spot them before they really become too overvalued. However, they will be making tons of money, in my opinion, based off of other companies that have had similar business models. I think they will be great companies to hold on to. So for that reason, Teladoc Health is your fifth stock on this list. Alright, so now we are at the part of the video where we are going to be talking about the word that no one wants to hear: taxes. Guys, taxes are a thing in the stock market. We have a lot of plays that have gone up a lot already, and we may want to take profits on those. And what you have to do with those profits, you have to pay the tax man. You have to report it to the IRS, and you have to pay your fair share of taxes. Well, there are many ways to use taxes to your advantage through write-offs. So one of the write-offs is incurring a capital loss. So like I said, with Apex Technologies, I bought it at $15 a share. Let's say I bought 100 shares. I paid $1,500 for my APXT shares. Now we are going to take a look right here at this little chart, and I'm going to walk you through it. It's a little intense to look at right now, and we're going to see what exactly I did with my $500 loss in APXT. So this is what we did. All right, so you can see we bought 100 shares for $1,500, right? And then we sold those same 100 shares for $1,000. So that's a $500 write-off now because I incurred a capital loss. So if you incur any capital loss, you can write it off against gains. So let's say I made short-term capital gains of $500. Well, now I don't need to pay taxes on those $500 because I have a $500 capital loss from APXT. Now, what I did with that is, now that I have incurred that capital loss, if I were to buy back the shares, that would be considered a wash sale. So I would no longer have that same benefit of writing off the $500 capital loss. However, there is a way using options to basically simulate owning 100 shares of a stock. And it is not the same security as just owning the shares itself, so it does not qualify as a wash sale. You can now use that capital loss and buy back in using options. So what I did is I bought 3 times, so I bought 3 options contracts of the $12.50 call options, which totaled $750. The expiration date for this was 1/20/2023. So I have over a year and a half left on this options contract, and I wasn't even planning on holding APXT for more than a year. I was waiting for it to jump, and then I was probably going to sell out. Now, with that being said, that cost me $750. So I received $1,000 for selling the 100 shares of the stock. I paid $750 for the 3 options contracts, and that means I have $250 of cash left that I can basically invest however I would like. So essentially what I've gained out of this is now I have a $500 tax write-off that I can use against capital gains in any of our plays that we had that have gone up a lot. I can use it for Fubo and sell Fubo right now and not have to pay taxes on those gains, so that is good. But I have more exposure to APXT than I had beforehand, and I'm going to show you this right here. Alright, so as you can see, here I am on Robinhood, and I have APXT buy call options. So you click buy, then you click call options. You make the expiration date January 20th, 2023. I like using the furthest out expiration date as possible when buying these because it gives you the most time and you suffer the least amount of time decay, which is a whole other lesson that I have to give you guys. If you want more options lessons, make sure you leave that comment down below because I'm always willing to give more lessons for you guys and make you guys better investors. So leave that comment down below if you want more options trading. Anyways, from this list, I chose the 1250 strike. Now, if that's too expensive for you, you can always bump up the strike. However, the higher the strike you go, the more risky, and the lower the strike you go, the less risky. So if you want to play the least amount of risk possible, lower your strike. Make sure it's in the money. If the strike price is below what the stock price is trading at, so $7.50 opposed to $10.97, $7.50 is lower, that means the options contract is in the money. In the money contracts are less risky for expiring worthless. So I chose the $12.50, which is out of the money, so this option can expire worthless. However, we do have over a year and a half of time left on this contract, so that is plenty of time for this stock to do what we want. And as you can see, if we scroll down here, the theta decay is about 0.3 cents a day. So that is 30 cents a day per contract, so 90 cents a day I am losing in time decay on these contracts. Now, the next one that we have to look at that is the delta. So the delta is 0.586. So that basically means if this stock goes up $1, the options contract will go up $59. So if APXT goes from $11 to $12, I will make $59 on the options contract, and this is each options contract, and I bought 3 of these, so $58 times 3, what is that? That's 174 shares of stock that these options contracts are simulating. So before this, I had 100 shares of stock and I sold it for $1,000. Well, now I paid $750 to basically simulate owning 174 shares of this stock. Now that may sound too good to be true because there are risks involved. However, with Leap's contracts, it is pretty awesome because the only risk really is it's gonna expire out of the money. There's a little bit of extrinsic value built into these contracts. However, it is way less than the extrinsic value built into some of the short dated out of the money contracts that you're seeing, like AMC options contracts and other stocks that are going wild these days. The value here on these Leaps contracts, especially the 2023 ones, in my opinion, are ideal. So the result of this trade that I made, I get a $500 tax write-off that I can write off against any short-term capital gains or long-term capital gains that I make this year. I also now have exposure to 174 shares of the underlying stock. So if APXT goes up $1, I make $174, opposed to beforehand, if APXT went up $1, I'd make $100 by just owning the stock. I also paid less money for the options contracts than what I sold the shares for, which gives me $250 in cash that I can invest however I want. It is not considered a wash sale because I did not buy back the stocks. This would not work if you just were to buy back the stocks. You'd have to convert it into a different security, such as an options contract, or maybe a different competing stock. So if you wanted to reinvest your money into a different stock instead of APXT, you can do that and incorporate the same type of strategy if you don't want to get involved with options. So there are a lot of benefits to this, and you guys should be taking note of this because taxes are everything in the stock market. So I hope you guys learned something from that, and I'm very excited to share you guys stuff like this because this is what's going to give you the edge over other investors. Other investors may just hold until they break even. You can do this and harvest those capital losses while also gaining more exposure to the underlying, which I think is a much better strategy personally. However, this is not financial advice. Nothing here on this channel is ever financial advice. So consult a financial advisor before making any of these decisions yourself. That's all I got for the video for you guys today. I hope you guys enjoyed these picks. I hope you guys enjoyed this lesson. Please leave that thumbs up on the video if you haven't already, and subscribe to the channel if you'd like to see more content like this. We try to post almost every single day, besides for the days when I'm out of the house and I just can't make a video whatsoever. I try to post every single day, so make sure you guys subscribe to the channel because we want you guys to join the family here on my channel. That being said, the video is complete. Time for you guys to click away and move on with your day. I hope you guys enjoyed, and yeah, peace.